This video is for entertainment purposes only. Welcome to my page, The Rational Millennial. I am your host, Michael Lindner, and I want to take a look at some of the top holdings in my portfolio and give you a couple of tips and reasons as to how I went about making over $100,000 in the stock market at 29 years old. This past year, 2020, was outstanding for my portfolios, for my performance in the stock market, and I hope it was for yours as well. Depending on what you hold or what you held, I hope that it was of great reward to you. And one of the reasons for starting this channel was to educate and provide some insight and knowledge that I've acquired over my years in business, as well as just really just taking a chance, right? Not being afraid to take a chance. And if you can stomach some of the risk, sometimes you have some big rewards. So I have a couple of things I want to cover. One is how I did that. I'll recap some of the weekly market news and talk about the major indexes and how they performed over the last week and the first full week of 2021, as well as provide a breakdown of the top ETFs, mutual funds, and individual stocks that I hold in my portfolio and ones I like moving forward. So without further ado, let's dive in. Just as a quick recap, again, major market indexes had a fantastic first week of 2021. The Dow Jones was up 57 points to 31,098. The NASDAQ had a monster Friday, up 136 points. It's now over 13,200. And the S&P 500 also climbed 21 points to 3825. Again, fantastic numbers for the first week. While there was turmoil in the streets per se, I'm not going to get into full news coverage. You can go, there's a lot of other YouTubers out there covering current events and, their opinion on them and giving you their take on it. I'm going to stay away from that. I'm going to simply dive into investments, securities, portfolio performance, portfolio construction, and I'm going to stick to that. If you want to watch a news channel, go flip on, ABC News or Fox News or whatever you watch, and that'll be that. So the market was fantastic for the first week. It was an unbelievable 2020. But I also had a strong 2017, strong 2018, even though it finished the year kind of bad, and then a pretty strong 2019 as well. I will tell you, I have been trimming some of the laggards in my portfolio over the last year and a half. Anything really that has underperformed its industry in terms of the index of the industry it's in, it's out. It's out of my portfolio. If you have holdings like that, I highly recommend you export your, you can go to your account, whether it's at Fidelity, Schwab, Merrill Lynch, UBS. You can export your 2020 performance. You can export it to Excel and just take a look. Look at what companies you have. If you own individual stocks, pull up an index. Take a look. Did the index, if it was up 30% in 2020 and your stock was only up 15%, well, if you don't really believe in it, you don't have very, very strong conviction in that company, then I would cut it. Get it out of your life. Move on from it. I know there's some emotional attachments. People get a little attached to certain companies they buy because obviously if you bought it, you had a strong enough conviction in it at some point. But over time, you just have to look at the numbers. Let the data speak for itself. If the numbers aren't there, just cut it loose. It's not worth sitting around with a blue chip flyer maybe that, like an Exxon Mobil that did really, really well for you in the 70s and 80s. But, let's just be honest. Over the last 10 or so years, Exxon Mobil is not doing anything. It's not a very innovative company. Again, it might have a good dividend if you love dividends. Could be a great play. But for me, in my portfolio, I do not need dividend-paying stocks. Again, I'm just about 30 years old. I want high growth, high performance, high return stocks in my portfolio. So here's a breakdown of some of my top holdings. These are some that I held in 2020. I added to some of the positions over the last, let's say, 6 to 9 months. And the next time we have a pullback here of at least 10% in the market, I will be adding to them as well. So here we go. Top holdings in mine currently. Again, this is in my Roth IRA. So, it doesn't really matter what you trade in, whether it's a CMA, whether it's a brokerage account, a retirement account, a 403B, a 401k, whatever it is. The method for the trading does not matter. It simply matters that you are trading and you are buying and holding the right securities in your portfolio. And that's what I want to go through in this YouTube channel, is giving you the best opportunity for success as possible. There's a lot of people out there talking about stocks. There's a lot of money managers out there getting paid a ton of money to not even keep up with the index. They don't even outperform the index. And if you have some of those mutual funds, I highly recommend, or even those ETFs, I highly recommend cutting them from your portfolio. If you're an index buyer and you love, your QQQ holding, that's fine. QQQ is a great investment. I love QQQ. I love VOO, VOOG, Vanguard Total Stock Market Index. They are great baseline holdings in a portfolio, right? If you're trying to build something, you're really young, you don't want to get super, you don't have a lot of knowledge, you don't know about sector funds and 3 times leveraged ETFs and, active equity funds, that's fine. But just know that there are things out there that perform better than your basic index strategies. Here's a few of them. Number 1 holding, FNGU. That's the Microsectors FANG Plus ETF. 2020 performance, this ETF was up 379%. This is an absolute baller of a strategy. Its expense ratio is 95 basis points, so it's a little bit pricey for an ETF. It is 3 times levered. So again, they're using leverage. The PMs of that are using leverage to outperform what your typical holding would be. So if you had a non-levered portfolio and you had 10 holdings, whatever the number that those stocks were up each day, that would be what the portfolio was up. When it's 3 times levered, if the average of the, let's say, 10 holdings was up 3%, you would be up, in theory, you're up about 9%. So it is very aggressive. If you don't want to take that much risk, maybe it's not for you. I personally love it. It's a staple in my portfolio. Top holdings in that: Twitter, Apple, Baidu, Facebook, Netflix. So some really, it's all about basically FANG, internet technology companies. Next one I really love is the O-Shares Internet of Things ETF. It's ticker OGIG. That performance in 2020 was up 108%, also a great high flyer. That one's pretty cheap, actually, at only 48 basis points, so the fee is pretty low. Top holdings there, also some great tech names: Amazon, Alibaba, Google, Tencent, Facebook. O-Shares, he's doing some really nice things over there at his shop. The next one I like, these are 3 funds that I love. I have been watching or I've been reading about Cathie Wood and about ARK Investments for about 2.5 years now. I heard about them when I started at an asset management company in 2015. I was working at Lord Abbett and heard about them, but I didn't really pull the trigger on it at the time. Actually, I didn't have a lot in cash. I just had a 401k, which is kind of building up my balances in that. So didn't have a lot of extra cash to kind of play with. But over the last few years, just kind of being smart with my money and allocating that in a couple of the right strategies, I've been able to buy more of the ARK investment products. The 3 that I really like: ARKK, ARKG, and ARKW. Top holdings in those are Tesla, Roku, Invitae Corp, CRISPR Therapeutics, Square. In their genomics, it's CRISPR, Arcturus Therapeutics, Invitae, Pacific Biosciences, and Twist Bioscience. And then in the internet portfolio, it's Tesla, Roku, Square, Slack, Spotify, all outstanding companies. If you don't have great companies in your top 10 or top 20 holdings, you're not going to have really strong performance. It's just the bottom line. So Cathie Wood is doing some amazing things over there. I like them because they aren't They aren't tied to any specific style map. If you look at Morningstar.com, I'm a big fan of the site. That's where I do a lot of my mutual fund research and my stock research. They'll have a style map, they call it, where it has a breakdown of, size of the company and then style. So it can be large cap, small cap, or large cap, mid cap, small cap, or it's growth, blend, or value. Kathy Wood doesn't have a strict mandate with hers. She can move them around depending on how she or the investment team sees fit. She'll buy small and micro cap companies, but she'll also buy large and mega cap. So I really love what they're doing over there at ARK Invest because of that. Another one of my top holdings is Global X Lithium and Battery ETF LIT. I got involved in LIT in June of 2020. Not with a huge holding in my portfolio, but I'm glad I put some money in because it really paid off. For the year, it was up 127%. And that fund, that ETF, I don't know a lot of companies in that space. I don't do a lot of research there. So I wanted to go with a good professional money manager that has some good analysts doing a lot of the back-end research on that, some of the bottom-up analysis. So I went with LIT. As well, I'm going to talk to you, like I said, give you a breakdown of some of the stocks in my top holdings in my portfolio individually. And I'm going to do video breakdowns on each of these, going through some of the financials and why I specifically like those stocks. There's a lot of people that will tell you they like a stock, but they won't tell you why they like it. I want to talk to you about why I like it, both why I liked it in the past and why I might like it in the future. So top holdings here: Apple, Tesla, Amazon, Nike, Snapchat, Spotify, Teladoc, Activision Blizzard, and Take-Two Interactive. I love some of the video game stocks as well. They're high flyers here. The more that the government continues to lock down different pockets of America and really the world, the more I think people will be playing video games. So Activision Blizzard, Take-Two Interactive, both phenomenal stocks. And I look forward to seeing how they'll do in 2021 as I continue to increase or continue to add to my current positions.
Finally, to wrap up my first video, I want to go through some of my top mutual fund holdings for 2021. If you have any questions about them, please shoot a comment submit a comment at the bottom on my video here. Like and subscribe to my page. Would really mean the world to me. And if you want, I can do video breakdowns for each of these mutual funds moving forward, go over the top holdings, talk about alpha, beta, talk about upside, downside capture, talk about R squared, what that means for a fund, both in the past and in the future. But for right now, I'm just going to give you a couple of tickers that I really like. These have been staples in my portfolio from day one, and I have simply been adding to them over time. Ridgeworth Aggressive Growth Stock. This is a large cap growth mutual fund. 2020 performance in this fund was outstanding. It outperformed the NASDAQ by close to 2x, if not a little over 2x. It was up 107% in 2020. It has an expense ratio. It's a little bit high at 1.26. It is not a levered fund. So great fund over there at Ridgeworth. They're doing some fantastic stock selection, and the manager has really done a great job. The next fund I love is Fidelity Advisor Growth Opportunities. That's FAGAX. It's the ticker. 2020 performance up 63% with an expense ratio at 1.1, which is pretty standard. Around 1% is a pretty standard large cap equity mutual fund expense ratio. Really where you're going to start getting expensive in that 1.5 to kind of 2.3 range is when you start looking into those small cap growth stocks. It's just very difficult to select small cap stocks. There's not a lot of analyst coverage on them. The research out there is very limited, and you really have to go through the small cap and the micro cap names kind of with a fine tooth comb to really pick the winners. So it's much harder to run as a portfolio manager, much harder to run a really top-notch small cap and micro cap equity portfolio. I'll talk about a couple of those as well here. So Back to the large caps, we have Fidelity Advisor Growth. We have Ridgewood Aggressive Growth. That Ridgewood ticker is SAGAX. T. Rowe Price Global Technology. This has been one of my favorites for the last 5 years. I believe it is a top 5 It's in the top 5 in terms of 5-year performance. It is it's a 4-star mutual fund on Morningstar.com right now. It was a 5-star in the past. It has one of the best 10-year track records of any equity mutual fund in the industry. It is 88 basis points. It was up 76% in 2020. And I absolutely love what they do over there on the equity desk at T. Rowe Price. They have unbelievable portfolio managers. In the mid-cap space, we have Legg Mason ClearBridge Select, ticker LCLAX. It was up over 50% in 2020. It's got an expense ratio of 1.47. Next, I love the Virtus Mid-Cap Growth Fund. I had a friend of mine in the industry a couple of years back when I was working at Lord Abbett talk to me about the Virtus Mid-Cap Growth Fund, and I put money in it then, and I've just kind of let it ride since. It is ticker symbol PHSKX. It was up about a little over 60% in 2020, and it has an expense ratio of 1.4. A couple of small cap names for you here. Like I said, they're a little bit more expensive, but they are phenomenal, and they really do provide some serious outperformance over the last 3, 5, 10, and 20 years. We have Wasatch Ultra Growth, WAMCX. Take a look at it if you want to do some of your own research. Again, these are mutual funds. They're very diversified. They are equity holdings, so they do carry a little bit of risk, or a lot of risk, I guess, if you were a super conservative investor. But it was up 71% in 2020, and it has an expense ratio of 1.25. The other, another small cap fund I really like is the T. Rowe Price New Horizons. Again, like I said, T. Rowe Price is one of my favorite money managers on the street. They do fantastic work. They're based in Baltimore, Maryland. And this fund was up 58% in 2020, and it has an expense ratio that's actually pretty low here at only 76 basis points. So not bad there. Finally, in the small cap space, I love the Virtus Small Cap Sustainable Growth portfolio. The performance wasn't as strong as some of these others, but if you look back, in 2020, it didn't keep up with, some of the high flyers. But if you look back 3, 5, 10 years, you will not be disappointed. It was up 43%. It has an expense ratio of 1.37. So again, just wanted to go through some of my top holdings, some of the funds and ETF stocks, individual selection that I really like, that I have some in my portfolio. Some of them I don't. Some of them I just simply really like them, and I will be buying them as I move forward in the future. Again, these were all names that I really believe in, that I like, and I gave you some examples of their top holdings. If they don't have companies in their top holdings that I myself have done some of my own research on, have looked at some of their financials, have believed in them in terms of fundamental analysis, right? True fundamental analysis, not looking at charts and, RSI, the relative strength index. I'm not looking at the 50-day moving averages and things like that. If you're day trading, absolutely take a look at those. They're very important. I don't day trade. If I buy something, I want to hold it at least 3 to 6 months. I like to know that, what I'm buying is a strong company, and it's going to have some solid performance over the next, they call that, I guess, intermediate term, is that 3 to 6 months or 3 months to a year holding. And all of those that I named, every one of those ETFs, along with every one of those individual stocks, to me personally, have the ability to outperform the general index over a 3 to 6 month or 6 month to 1 year holding. Anyway, guys, thank you very much. I appreciate everybody's time here today. I appreciate you for clicking on my video and taking a look and sharing the time with me and going through my portfolio. Comment, like my video, subscribe to the channel if you'd like to see more videos just like this. And if you want to drop a comment, let me know if you'd like, give me some tips on what you'd like to see here moving forward. Thanks so much.